Systemic mismanagement is your worry. How is this going to hit the business fundamentals from your point of view?
Yeah. Well, let's be clear. I had a sell rating before all of this.
Since July, right?
Yes. When it was around where it's trading now. And the reason for that was because I think most of Wall Street was ignoring limits to growth that all digital advertising faces, that all advertising faces, and that they're ignoring costs that would be rising and capex that would be rising. And I think people were just looking past this when you go beyond 2020. So we had a lot of issues over the last 18 months that were certainly concerning. We had advertising measurement errors. We had an inability to take down inappropriate content when requested without sending a reporter to the police. We had just a ton of other issues, selling illegal ads and not having processes in place to stop that. And you could look at any one of those things in isolation, and you could say, oops. And then you get this. And you go back and read the original Guardian article from December 2015. And it just lays out this path that was so clearly not followed. And Facebook can claim that, oh, we sent a letter. We sent a letter. That's it. OK, good for them. So it sounds to me like there's some operational problem.
Yeah.
That's a new risk.
Let's get Ben's point of view, because, Ben, you are expecting perhaps more than just letters in the future. You say there could be more radical actions taken, but this won't dent your view that still this is a buy?
Well, listen, I think overall the stock is actually relatively cheap based on what we expect the earnings to be in the foreseeable future. I think there are a lot of really interesting issues raised by a lot of the recent headlines, but my job is to be an equity analyst and figure out what the financial impact of this is. And thus far, you know, we don't see significant impacts. I don't see changing my model dramatically based on these things. So lots of interesting social issues to discuss, some of those which could impact the company. But in terms of the actual financials right now, you know, I think there's a lot of negative headlines, but I don't see a lot of negative impact to the actual financial model.
Respond to that, Brian. Why doesn't it affect why does it affect your?
Well, it makes it worse than I would have expected. Now, again, I don't think I'm very far from consensus on current year or next year. So that's not the issue. It's beyond that where I think there's issues in terms of just overall growth. But where I think there are new risks that are amplified when it comes to something like GDPR. I mean, here in Europe, that is the most important thing that will impact digital advertising.
Spell out GDPR, because it comes into action May the 25th. It's EU law. Exactly.
And this is the General Data Protection Regulation. Now, it's unclear exactly how this will play out in terms of what decisions advertisers will make. Ambiguity and uncertainty rules the day, even now among large advertisers 2 months away from implementation, about how you can use data. It probably is negative for the overall industry, but it's not certain. But here's the thing, it's the fines. And if it wasn't clear whether or not the EU would pursue Facebook aggressively, and Google too, by the way, it's unambiguous, they'll go after them. I mean, this is the problem. You get that element of regulatory risk, which you could think, well, maybe they can out-litigate, maybe they can outlast. That's going to happen. And then you can look at the possibility of something like that in the U.S. Yes, these are tail risks that you can't really anticipate, but they will have to incur more costs to know their partners. They will have to do things that will have the effect of slowing their growth intentionally to manage the business in a way that will prevent these sorts of things from happening. Those will impact the model that we haven't incorporated in my model. Those are risks, at least.
Ben, have you incorporated regulatory risk within your model? Is it baked in from your perspective?
I've been covering the space for almost 20 years. Political, regulatory, legal risks have been around since the beginning, and they're absolutely legitimate, and they are real concerns. However, we've seen the Internet, and Internet advertising in particular, grow at dramatic levels over that entire period. And so I don't want to dismiss these. I don't want to get too comfortable with some of these issues. I think Brian raises some very valid points. But the fact is, this is where users are. And as long as the users are there, the advertisers are going to have really no choice but to follow them. If I think these headlines do lead to more people leaving these platforms, that's a real legitimate risk, and that's something we're going to be watching for. But not a lot of these issues are dramatically new, and you know the reality is they're not dramatically different than they've been in the past. I think they're getting a lot more focus now, and I think again there are interesting social issues to discuss. But our role as equity analysts is to really focus on the model, and there I just don't see a lot of meaningful changes right now.